And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning, friends, family, and fellow futures traders. It's Capital Preservation Friday, August the 26th. As always, our focus here is on accurate context, good risk management, and patience. It's National Women's Equality Day. Should be every day. It's also National Hot Dog Day. Good morning, everyone. I'm looking forward to doing some successful fishing for everyone here today. We have a lot of economic data due out today. We are well aware of what we've got, but 7:30 this morning, not only do we have known information, we have Raphael Bostic, one of the Fed members, speaking as we speak. International trade came out today. A pretty big drop in the trade balance. Last month, it was minus 98.5 billion. This morning, minus 89 billion. So a big drop in the trade balance inequality there. The PCE price index, one of the things that the Fed really kind of focuses on, it's one of their favorite inflationary numbers, came out a little bit lower this morning. Income and spending up down 0.1, up 1.1%, lower than expected, and income up 0.2%. Retail wholesale inventories, no shockers there. We're looking for consumer sentiment, the Michigan consumer sentiment at 9 o'clock this morning, and then also at 9 o'clock. Fed Chairman Powell is going to be speaking. It's going to be interesting to see if he has anything to say about the numbers today. U.S. stocks are set to open lower, awaiting a lot of the economic deluge today. We've got our equities slightly lower, nothing's tragic. Hoping, again, we do some successful fishing today, not just those that are in Jackson Hole. Market seems a little bit torn between a 50 or a 75 basis point rate hike at the September FOMC meeting. And of course, perhaps Mr. Powell will shed some light on that for us today. Europe's energy crisis is reaching epic proportions while the Saudis and the OPECs threaten production cuts. The VIX this morning, last I checked, was up a little bit here at 22.24. Dollar index took a little bit of a dive to the downside after the numbers came out this morning at 108.13, and the yield on the 10-year pops up a little bit, 3.05%. As always, make sure you hit the lucky like button. Share, comment, question, feedback, and heckling and love are always welcome here on the Market Forecast. Subscribe to our YouTube channel so you can get notified when we do go live. Speaking of going live, yesterday during Make Hogue Money, we had a couple of small losses throughout the session, but we set up a short that ended up paying very nicely, paid for all of the previous losses and then some. We had a pretty good profit target on that. We almost got to it before I took it off, but still, we ended the day positive by setting up that kind of a longer term trade at the end of Make Hogue Money. So thank you all for the voting, for the ideas, for the thoughts, and a profitable day for us yesterday. If you attended any of the group coaching sessions this week, I thought this week was very good and very interesting. Really great questions, and it's always a good time for me to challenge myself to be able to answer those questions, because as we all know, nobody knows everything, and I certainly don't. But I think we did a really good job of bringing some really good questions and having really good sessions. So yes, today, Friday, capital preservation. See a couple of people talking already about putting up a good week, just making sure that they end the week a plus player, and that's always a positive thing. Fridays to me are always days where I'm going to see if anything comes to me early in the session. And as the day goes on, I'll probably be a little bit less interested in looking for opportunities. You always said in the trading pits, if you were still in the pit at 2 o'clock or after maybe about noon on Fridays, you were probably down money. So nobody wants to be down money at noon on a Friday. So let's find some good opportunities. Let's catch a couple of fish and then call it a weekend. As far as everything else is concerned, I think we're in pretty good shape. Got to say good morning to everybody. Brody's the first one in the room this morning. He wins the prize. James, Dario, good to see you. My brother Rick is with us as always. Thank you for coming, Rick. Love you. Tachyon Scott saw and he conquered. Theodora, good morning. Kevin, Dark Heaven. I like that name. I've been trying to figure out what that name is, and it seems to me like it's a Game of Thrones or a House of the Dragon name, like what was it, Daemon and Daenerys and Dark Heaven. So I see you riding a dragon at some point, Dark Heaven. Shaw Cunningham, Capital Preservation, absolutely. Marcelo, Serenity Trader, Buen Dia, Rooster. I was talking about having that profitable week, making sure you protect your gains today. I'll say after 2 down weeks, I need a good opportunity to jump into a trade today. Let it come to you, Rooster. Some of the best trades I've ever made were so cheap I just had to take them. Ron Malat, Glitter Sandwich, good morning. Orion Andrew Beaster, good morning. Bill, Terry, D.A., Frederico, Tony, good morning. Sarah Hall, good morning. Prayers and love to you as well. Dimitar, Dan Trader, Vince, good morning. Eggle, Michael, good to see you. Dead letter opener. Unicus, his quote for the day: build your own dreams or somebody else will hire you to build theirs. Wonderful quote today, Unicus. Thank you so much for putting those in, and I hope you have a good weekend too. Good morning, George Duquet. Anissa, good morning, Chris. GM caught the pop in GC to the VWAP this morning, up $540. Nice job. Nice job. JST Wave, Will Hawks, good morning. John Doherty. Three Lions Trading Research, Janus, good morning. Joe. Controlling risk on step 2, but can't seem to gain any traction. Past step 1 easily, but 2 is hard. You're closer to where you want to be, Joe. It makes the decision making a little bit harder the closer you get to where you want to be. It's when you are funded. Remember that it's going to be even a little bit harder to make those tough decisions when there's real skin in the game. You've got skin in the game now, but just take your time, stay in your process. Don't step away from process and strategy. Your strategy is working for you. Stick to it. You will get there. Don't try and get there in any specific time and forget about the profit target. Just look for the next good trade, manage risk, and you will be there, Joe. Jack, good morning. Robert Dwyer, good morning. Servide, good morning. Servide, thank you. I like to get everybody's name right. JP, that one's easy. I did that. This AM 33-second trade. Well, good. I'm glad you had a good trade. Andrew, guten Morgen. Orion, same here, Joe. Morgan, however I pronounce that name, welcome. Zerain, good morning. And Diggable Mac D. Yeah, glad to see back to starting here again and being inspired by you all. Well, Diggable, we're inspired by you as well. We're looking forward to your success as well as everybody's success. Let's jump into the charts here. So maybe we can catch the open in crude oil. Let's see what's going on with that. Lots of fundamental changes in information currently going on with crude oil. So we're going to take a look. But first, at the E-mini S&P, starting with the daily chart. It's going to be an interesting trading day today, as if they all aren't. All right. So here's the daily. We see that we've got some upward momentum. We've come off of that upward momentum. We've put in a low here near weekly kickoff low. Yesterday, finally, we see higher price, higher volume, and an increase of approximately 15 to 16,000 contracts added on this up day yesterday. So holding at weekly kickoff low, we're starting to bring in some new business to the upside, and that's healthy for the upside auction. Lots of data. You're going to hear me say that a few times today. Jay Powell's speech is going to be sensitive. And as always, our acronym here on the market forecast is anything can happen. Take a look at the 30. What do we have? Well, this is the gap from Friday to Monday. Range bound, dragging along the weekly kickoff low, unable to accept it in the S&Ps, and now finally bringing some open interest and volume back to the upside. We're still in the gap from Friday to Monday of last Friday to Monday. We've yet to be able to take that out. But what did we do yesterday? We left a late spike. The late spike. What are the rules of the late spike? What is a late spike? You can see this bar at the end of the day, the 2:30 to 3 o'clock bar closed right at the top of it. There was a change in the perception of value late in the day yesterday, apparently, but it didn't have time to digest. It didn't have time to find acceptance at higher pricing, which leaves this late spike. Overnight inventory was short. We've now reconciled that. We've taken price all the way back to settlement, but almost to the high of yesterday. So, what are the rules of the late spike? Opening above the late spike is one of the highest probabilities of acceptance of higher pricing. Opening in the late spike, which the base of the late spike is 41.85, the high of this bar here. That's where the market really started to accelerate. Then we've got the base of the late spike, which is down here, which is 41.7675. Above the late spike is the highest probability of acceptance of higher price. Open in the late spike, it's still a little bit iffy, but the market is spending time in the late spike, which is an indication of possible acceptance of higher pricing. Opening below the base of the late spike is rejection of higher pricing. So they're making it a little bit more difficult for us so far this morning in the fact that we're opening inside the late spike. It's a lower probability of acceptance of higher pricing, but it's a higher probability of that acceptance of higher pricing than the rejection thereof. Rejection of higher pricing comes if we accept down below the base of the late spike, which is again 41.85, and below the start of the late spike, which is where this 230 bar traded down to, which is 41.7675. The overnight low is between those two levels. It is going to be supportive if revisited today. So I'm looking at the overnight low as an important level if revisited today. It's going to be pivotal to real acceptance of higher price or rejection of higher price and acceptance lower. It's looking more and more like we may open outside or above the late spike, which is the friendliest to the upside. May make it a little bit harder to trade, although when isn't it hard to trade? And again, anything that happens today with Powell or anything, the information that's still due to come out can be a spoiler for all of that. We're pretty sure that Powell is going to be very careful in his wording. He's going to try not to upset the markets. If they start the question and answer and something happens, you never know what's going to happen. So opening in or above the base of the late spike has me looking for opportunities to buy weakness if I get it. Let's take a look at crude oil. I understand it's getting crushed. Well, weekly kickoff high certainly was one of the best trade locations or opportunities for us this week. Weekly kickoff low on Monday was also a pretty good support level. I don't know how often this happens, but rarely do I pick the low and the high of the week in the weekly kickoff levels. Sometimes I'd like to call them weekly kick-ass levels, but I digress. So, weekly kickoff high holds at resistance. Market acts range bound. It lost a little open interest and volume off the high from yesterday. Lower volume. We lost about 14,000 in open interest. Fundamental threats from the Saudis and OPEC have traders nervous, and some of them out of the market. Losing 14,000 in open interest is probably largely speculators saying, you know what, I'm going to step away from this for a little while. Our longer time frame traders are I'm sure hedged. Take a look at the 30. Range, expanding range. Our weekly kickoff high attempt yesterday, fail. Losing open interest, long liquidation. I'm expecting better trade locations as the day goes on today. We've got a little bit of a gap down here with which to fill. We've tested down to it and have kind of rejected it. Our opening range, let's take a quick look here. Looks to be rather substantial. We've got 8 o'clock. We've got 41.85 to 41.92, 41. So, we're looking at, 55, 60 tick opening range. That's rather large. We've taken out the high of it, so if we're going to be looking for opportunities for longs, this could be one of those opportunities. But again, it is pretty large for the amount of risk. But if this thing does turn around and continue higher, you might be sitting pretty with that. Again, really kind of expecting better trade locations as the day goes on. If the opening range remains the low, that's going to make a liar out of me. We opened out of range and out of value. Acceptance inside value from yesterday could bring forth the value area special situation play, which could push us all the way to the high of value from yesterday. So even if we've missed this opportunity down here, there's going to be opportunities as this day goes on. And of course, we always, every time we put on a position, we have to have a stop in. Some people say it's not a good idea to put some sort of catastrophic stop in, but with the current information in Iran and OPEC and their potential to change this market drastically, please, I implore you, put in a stop. You got to use them. So again, looking for maybe good trade locations, better trade locations as the day goes on. This little gap close here could be an interesting spot for us. 92.50 is a previous weekly kickoff level that put in our low yesterday. We're coming at it from the other direction today. If we can't accept inside value, and certainly wouldn't be accepting if we can't accept inside range, we certainly can't accept inside value. We have visuals down below. We have a gap. We have a naked point of control down here, which takes us all the way back down to this week's low, which is weekly kickoff low, 86.75. Be patient. NASDAQ. Similar but different. We had some increases in open interest below weekly kickoff low. The last 3 sessions really have spent time below it overall, increasing open interest. Yesterday, we said the heck with that. We lost open interest. Now, only 700 of it, but that to me is indicative of we're too short in the hole here. We've got to get out and head the other direction. So it seems right now as we trapped some shorts down below here, and those shorts covered and probably looked the other direction above that level. Here's the 30-minute chart. We also have a late spike, and it's looking more and more like our equities are going to open above the late spike, which is the highest probability of acceptance of higher pricing. We're going to be looking for opportunities to buy weakness today if we get that opportunity. Opening range trades might be interesting for us if, again, we can keep the risk on them limited. We have price higher yesterday. We have volume higher yesterday. We have open interest lower yesterday, indicating some trap shorts down here and perhaps even some new business adding to open interest in the other direction. Heavy day today. Of course, anything can happen. We're working in probabilities and hypotheses here, right? Probabilities if we open above weekly probabilities if we open above the high of the late spike, we're likely to continue this move to the upside. Nothing happens exactly the same ever, and of course, anything can happen. The late spike rules. Opening above the late spike is the highest probability of acceptance of higher pricing. Try and find weaknesses to buy. Opening in the late spike, also an acceptance of higher pricing, just not as strong a probability. Opening below the base of the late spike is rejection of higher pricing. Look to sell strength in that situation. Right now, we're above the base of the top of the late spike. This is showing acceptance of higher pricing, and people are seeming to like the economic data that has come out this morning. Use stops. The base of the late spike in the NASDAQ, if you want to write these down, is 13,188. 13,118, not 188, 118. 13,118. The start of the late spike, which is the low of the 230 bar down here, is 13,072. 13,072. I'm thinking we probably won't be seeing that today with the fact that we're opening above the high of the late spike. These are always exciting days for me because the references and the nuances are really strong. But again, anything can happen. I'm going to get a new badge and put that behind me, and it's going to be up there. ACH. Gold. Okay, our rally has fallen, our little short-time rally here. We lost another 1,200 in open interest on this push to the upside on lower volume. This little bear flag was doing exactly what it was supposed to do. It was narrow ranges, falling open interest, and falling volume. We've broken out down below it. The target for this, to me, the short target would be down here at 1743 approximately. Take a look at this on the 30-minute chart. Downward momentum. Upward, narrow ranges on lower volume, losing open interest. We've broken out to the downside. We got a little bit of information this morning that changed our direction, at least initially, but we're still no gap close, unable to close the gap. We've got overnight inventory to the short side. This might just be an inventory adjustment. If we can't close the gap relatively early, what do? We look for opportunities to trade in the direction of the gap. We got to remember, we do have some overnight inventory that's still to the short side, and a move all the way back up to this trend line is not out of the question and doesn't change the fact that we've broken out down below our bear flag. Oh, what to do? Here's the euro. A little bit of a change in the U.S. dollar after the information this morning. Going to take a quick look at it here. The dollar continues to leak to the downside, back down almost to 108 after the information this morning, down approximately 0.4%. This $1 par certainly has been magnetic. Are we going to leave that area now? We have lost 3,800 in open interest yesterday. There's a lot of money that is trading the euro that is on the sidelines right now. This par level has been magnetic. That may change today. We're looking at that volume and open interest drop is, people probably protecting themselves from a big move today. And I'm looking at the range bound extremes, which I've got listed here at 1.0048. We're above that now. Are we going to break out above this range? The bottom of the range that we're in, I've got down here at 0.9916. So we've got a potential breakout of balance that we're dealing with here right as we speak. Here's that area of balance. We are kind of testing above it. Are we going to continue? We've got a gap above yesterday. We've got a gap above this, above the high of regular trading hour sessions this week. We're right at the last week's low. We've got plenty of visuals above with which to go back and recheck. We've got this gap here that we still haven't been through in regular trading hours. We've got a gap here. We've got naked point of control here. We don't have all that visual information down here. We spent 3 days, 4 days closing below weekly kickoff low without bringing new business to the downside. There's a lot of money out there looking to get back into this euro. This could be, might it be, could it be, could be a big day. We got no attempt to close the gap here. And again, we are looking at some pretty strong visuals after being unable to find momentum to the downside after 4 closes below weekly kickoff low. This psychological one par level here for the euro. And 10-year. All right, so let's see here. We are in rollover, by the way, for our treasuries. Volume is just about even. We're going to be changing into the December contract for our treasuries next week. Keep that in mind, because yesterday adding 109,000 in open interest, that is a function probably more of rollover than new buyers coming into this market. Although it may not be all rollover. We had some pretty good momentum to the upside yesterday. We had a stab down here to the weekly kickoff low. Let's look at this on the 30. So I didn't put settlement on here, did I? I thought I did. It's 12.25. Close enough for rock and roll. Overnight inventory to the short side. Up against an important inflection level in the weekly kickoff low. We see that the market at 7:30 drove away. It's continuing to drive higher. There is very little visual down below, visual targets. We've got tons of visual targets above in this market. There's a lot of weaknesses in this move to the downside. If we've put in a low here, I'm going to be thinking about starting to buy weakness in this market. We pretty much opened outside of the area of repair that we might be looking at. We start to see rates going lower. Really? We'll have to see. And for our natural gas, that nasty market, don't forget it is in October now. If you do trade natural gas, you want to make sure and trade the most liquid market, because this market is very illiquid a lot of the time. Volume still remains relatively strong on these days. We lost 1,700 in open interest. We're looking at some pretty wide range-bound activity here. You look at this week's high and this week's low. We're pretty centrally located. We're right at weekly kickoff high here, which may be something we can lean on a little bit in our opportunities today. Hang on a second here. I hate it when I do that. All right. So we had some overnight inventory sharply to the long side, magnetic to weekly kickoff low. Overnight inventory adjusted. We've opened with a gap now above yesterday's session, up against an important inflection level. It's giving us, some indication of continuation to the upside with the inability to close this gap. But again, I'm going to be really, really diligent in looking for levels or areas where I can really limit my risk. I wouldn't want to risk a lot in this, and I'm forever thankful that I don't have to trade this market, because it is wicked and vicious. Okay. So Bookmap has some monster orders on ES at 42.40 and 42.50. I want to take a look at this. 42.40 and 42.50. It seems as though quite often in the S&Ps, those round numbers like that, they always seem to have some large orders at those levels. We see it in the profiles quite a bit, in the volume profiles quite a bit. Be interesting to see if they are still there. I would love to see the opportunity for us to get up there today. I don't know if it's going to happen today, but thank you again for that information, Double R. Nico, good morning. Double R, great for my Bitcoin. Dollar still falling. Well, we're going to have to navigate these markets. We are in the markets environment. The market is not in our environment. It doesn't know us, doesn't like us, doesn't dislike us. It just does what it does. The market is the collective perception of value of all the current participants affecting the marketplace. Find your spots. Let the market come to you. I know it's kind of hard to describe what that's like, but sometimes if you're patient, sometimes the market's going to put you in a situation that you're going to notice, that you're going to say, I've seen this before. I think I know what to do. And it doesn't guarantee a winning trade, but I guarantee you it's going to help you limit risk. And just if you get a couple of those good trades that way, you can put up a really nice day. And that's what I'm hoping for everybody. It's always, about the context and about the hypothesis. Recognizing the hypothesis that's coming true and using the strategy that relates to that hypothesis. Have a good weekend, everybody. I won't be seeing you till Monday morning at the same time, 7:45. Make sure you're kind to yourselves. We deserve to be good to ourselves. We work really hard at this. Of course, you want to be kind to others. Keep praying for peace. And if you have unrest, pray for your own peace as well. It's okay to do that. Call an old friend. Call your mom. Call your dad. Call your brother. Call your sister. And blessings to you all. Trade well. I'll see you in the proverbial trading pit here shortly. And have a great weekend. Get some rest. Have some fun. We'll see you Monday morning. Trade well today.